Good morning, everyone. Happy Thursday. My name is Julie, and welcome to our TipRanks pre-market morning update, where we are bringing you up to speed on everything you need to know before the market opens. I am here Monday through Friday with videos out before the opening bell, so make sure that you're subscribed to the channel and hit that notification button too so that you don't miss out on any updates. We have a lot of great info today to cover. We are taking a look at earnings reports, our biggest gainers and losers, plus other stock market news. So here we go. U.S. stock futures have fallen today as rising bond yields and an inflationary outlook have curbed investors' enthusiasm. Investors are awaiting monetary policy comments from Fed Chairman Jerome Powell in a question and answer session expected later today. Investors will also be watching for the February jobs report, which is expected out tomorrow on Friday. But today, we're expecting the Labor Department to come out with a tally for the most recent unemployment claims from last week, and they are expecting an increase in those numbers. Now, moving over to notable earnings reports. Before the bell this morning, we're expecting reports from Stellantis, Kroger, and CRH, and we've already heard results from BJs Wholesale Club. BJs Wholesale Club reported Q4 earnings per share of 70 cents, which was 3 cents better than the analyst estimate of 67 cents. Their revenue for the quarter came in at $3.95 billion versus the estimate of $3.94. Their adjusted EBITDA increased 36.1% year over year to $204 million. For their future outlook, they said that given the level of uncertainty associated with the evolution of the pandemic, member behavior, and government stimulus, fiscal 2021 remains difficult to forecast, and as a result, they will continue to refrain from offering formal detailed guidance, which could be the reason that their stock is down about 2.85% in the pre-market. In after-hours earnings reports yesterday, we heard from Splunk, who surpassed analyst expectations. The data analytics software company posted revenue of $745 million, which was down 6% from a year ago, but well above the analyst consensus estimate of about $686 million. Their non-GAAP profits were 38 cents a share, which crushed the consensus estimate of 4 cents a share. Their cloud-based annualized recurring revenue was $810 million, which was up 83%. So far in the pre-market, they're up about 4.4%. Also reporting, we had the Dollar Tree. Their 4Q adjusted earnings increased 19% year over year to $2.13 per share and beat the street estimates of $2.11 per share. Their net sales advanced 7.2% to $6.77 billion, just slightly missing analyst expectations of $6.79 billion. Additionally, the company bumped up its share repurchase authorization plan by $2 billion, so Dollar Tree now has a total $2.4 billion share repurchase authorization. Yesterday, the stock was up nearly 3%, but this morning in the pre-market, we're down just over 1%. And lastly, from yesterday's earnings reports, we heard from Vroom, who unfortunately posted worse than feared losses. Vroom reported fourth quarter revenues of $405.8 million, which did top consensus estimates of $402.4 million. However, a 57.9% decline in revenue from their Texas Direct Auto adversely impacted its top line. Vroom posted an adjusted loss per share of 44 cents in the fourth quarter, while analysts had expected a loss of just 39 cents. Looking forward to Q1, the company expects to generate revenues in the range of $500 to $529 million. However, they foresee a first quarter loss in the range of 61 to 68 cents per share, significantly wider than analysts' expectations for a loss of 39 cents per share. Yesterday, their stock was down just over 8% and is so far down over 15% in the pre-market. In the after-hours market today, we're expecting to hear earnings reports from Costco, Broadcom, Smith & Wesson Brands, Smile Direct Club, and Slack Technologies. Now, shifting over to our biggest gainers and losers. Our most actively traded stock this morning is Allied Esports Entertainment. There's no company-specific news reported, but their trading volumes have been increasing over the past few months, and the stock is up almost 60% year to date. So far in the pre-market, it is up about 23%. This makes Allied Esports one of our top gainers this morning, along with Severn Bancorp, or SVBI, who is up over 30% in the pre-market, Tanger Factory under SKT, who is up about 18%, and Belsium Pharmaceuticals under BLCM, who is up just over 20%. Looking at the companies that are our biggest losers so far this morning, we have Schrödinger under SDGR, who after being down over 7% yesterday, is down over 27% in the pre-market so far. Purple Innovation under PRPL, who is down over 22%. And Yext Incorporated, or YEXT, who is down nearly 20% in the pre-market. Now, taking a look at other notable stock market news. Starting off with Green Thumb, who inks a partnership for a cannabis-infused drink. So Green Thumb Industries has inked an exclusive partnership to manufacture and distribute Can's line of cannabis-infused sparkling drinks in the US starting this spring. According to the partnership deal, Green Thumb will roll out the distribution of canned drinks in Illinois this spring and additional markets including New Jersey, which recently legalized adult-use cannabis sales. Green Thumb Industries is currently rated a strong buy with 9 buy ratings, but we will see if we have more analysts upgrade their price targets after this news. Apple is being investigated by a UK regulator over their App Store rules. The UK's antitrust regulator has launched an investigation into Apple following complaints that the iPhone maker's terms and conditions for their software app developers are unfair and anti-competitive. Specifically, the UK's Competition and Markets Authority will probe whether Apple plays a dominant role in the distribution of apps on the iPhone maker's devices in the UK. After a Reddit-fueled short squeeze caused the Rocket Company's stock to surge over 70%, we've seen it pretty much give up all of those gains nearly, dropping down over 30%. Currently trading at $27.72, Rocket Companies is already above the average price target of $25.67. Our most recent price target came 2 days ago from RBC Capital with a hold rating and a $30 price target. FedEx recently made an announcement with a goal to become completely carbon neutral by 2040. They've designated an initial investment of more than $2 billion to help get there. In a statement, the global delivery company announced plans to make its entire FedEx fleet zero-emissions electric vehicles by 2040. It will also invest in alternative fuels to reduce aircraft and vehicle emissions and aim to make its 5,000 facilities worldwide more sustainable. So another massive company headed in the EV direction. So that is our Thursday morning pre-market update for you. If you enjoyed today's video, make sure you hit that thumbs up button, that you're subscribed to the channel, and leave your thoughts in the comments down below. Thank you guys so much for watching. I hope you have a wonderful day, and we will see you back here tomorrow.